It's a great honor for me to be here at the Empire Club of Canada today, which is arguably the most famous and historically relevant speakers podium to have ever existed in Canada. It has offered its podium to such international luminaries as Winston Churchill, Ronald Reagan, Audrey Hepburn, the Dalai Lama, Indira Gandhi, and closer to home, from Pierre Trudeau to Justin Trudeau. Literally generations of our great nation's leaders, alongside with those of the world's top international diplomats, heads of state, and business and thought leaders.
It is a real honor and a distinct privilege to be invited to speak to the Empire Club of Canada, which has been welcoming international diplomats, leaders in business and in science and in politics. When they stand at that podium, they speak not only to the entire country, but they can speak to the entire world.
Good afternoon, fellow directors, past presidents, members, and guests. Welcome to the 116th season of the Empire Club of Canada. I am Mike Van Solen. I am the president of the Empire Club, and I'm delighted to be your host for today's virtual meeting, helping Canadian businesses absorb the shock of COVID-19, an overview of the financing supports. I am very pleased, from my home to yours, to call this meeting to order. We couldn't do these events without generous sponsors, so I'd like to first thank our lead event sponsor, Tories LLP. I'd also like to thank our event partner, VVC and livemedia.ca, Canada's online event space for webcasting today's event. And finally, I'd like to thank our media partner, the National Post. The COVID-19 pandemic is a once-in-a-generation health crisis. It has also thrust our entire economy into a deep freeze. The entire sectors of the economy have been shut down. Businesses of all stripes have turned to government and its agencies for supports. And government has stepped up by tapping the expertise of our two guests that we have with us today. Many of the new business support programs that the federal government have rolled out are being run through the Business Development Bank of Canada and Export Development Canada. Since the earliest days of this crisis, their phone lines have been burning up as business leaders and executives have called them for their insights, for their guidance, and for their advice, which is why it is a rare privilege to have leaders of both organizations with us today. By way of introduction, Mairead Lavery is the president and CEO of Export Development Canada, the country's export credit agency. Under her leadership, EDC has helped thousands of companies grow and succeed internationally. And native of Northern Ireland, she was an executive at Bombardier before joining EDC, where she is the first CEO of the organization in its 75-year history. Michael Denham is the president and CEO of the Business Development Bank of Canada, and the nation's only bank entirely devoted to entrepreneurs. Michael's team of 2,300 have worked with tens of thousands of organizations representing companies of all sizes and in all sectors. He brings more than 30 years of private sector experience, having had past roles at McKinsey and at Accenture. Today's event will be moderated by DeCloet, the managing editor of Bloomberg News Canada. During this chaotic time, Bloomberg's reliable coverage has been an invaluable source of information for thousands of Canadians, which is no surprise under Derek's leadership, as he has been a leading business journalist for over 20 years. I hope you gain a lot of insights and information out of today's webcast. Feel free to ask questions. We will try to get to a number of them through the course of the hour we spend together. There is a question tab on your screen where you can do that, and we will work to provide some of those questions to Derek so that he can ask them of our guests. So with that, very much looking forward to today's event, and I'll hand it over to Derek.
Thanks, Mike, and welcome from my dining room. It's our pleasure to have Michael and Mairead here joining us from BDC and EDC to talk about what those organizations are doing to help businesses through what's really the economic challenge of a lifetime. So maybe we could just start, since we build this session as an overview to start of what businesses can do and what help they can get. Mairead, maybe we can just start with an overview from the EDC side. How can businesses tap in, and what sorts of things should they be thinking about?
Thank you, Derek. And from my dining room to your dining room, I think that's where we're all hanging out these days. And thank you, Devin and the Empire Club, for this opportunity. Well, we certainly are living in interesting times, and our customers are really feeling that. So let me start by perhaps introducing EDC, if your members are not aware of who EDC is. We are Canada's export credit agency, Export Development Canada, and we have a mandate to help all Canadian companies, what we would call go, grow, and succeed internationally. So really help them with their export journey. So a very specific type of growth that we're addressing. And we do that in three ways. We do that through providing them knowledge, providing financial services, both in terms of financing and insurance. So that's our normal day job. And that is coverage that we provide to 17,000 companies last year who do over $100 billion of business in exporting. But I have to say, it's very different times today. It is truly all hands on deck. And you mentioned that our phone lines are ringing off the hook. That is very much the case. Many Canadian companies, whether they are internationally focused or just focused here domestically in Canada, struggling with the impact of the COVID-19 crisis. So obviously we did rotate. Our shareholder gave us some additional powers to help not only exporters, but to help domestic companies. So really since March 16th, when all of my team started to work from home, we've been not only testing our own resiliency as EDC, but really standing up some new programs and extending our existing programs to help some companies. So let me tell you, Derek, a little bit like what that looks like. So if I think of just EDC as an organization, 100% people working from home, I'm very fortunate that we have financial services products that we can work from home. And we certainly have also the luxury of being in Canada and having snowstorms every year to test our business continuity plans. So that's what happened in February, and that's what resulted us in really rapidly being able to work from home. The first thing we did was actually to expand all of our existing products. So the insurance products and the financial products that I mentioned, that has included deferrals of interest payments, deferrals of principal payments. We're working with many of our insurance companies to understand how we can deal with their insurance claims, because that's something that we're seeing a lot more of in this economic context. So number one, let's help our existing customers. As we then moved with our shareholder and with partners like BDC and the Canadian banks and credit unions to actually stand up some other programs. So one that you may have heard of is the Canada Emergency Business Account. That is a $40,000 loan provided through the financial institutions. I'm very proud to say that EDC is the agent for the government with respect to that emergency business account. And we've really been standing up agreements with the banks to enable to fund them and to enable them to get as much liquidity out to small businesses as they can. So as I said, it's a $40,000 loan, $10,000 of which is forgivable, if in fact it is repaid by the 31st of December 2022. It's a zero interest loan, so a really great place for companies to start. Very proud to say at the moment we have over 450,000 companies who have accessed that loan through their financial institution. And we're expanding the reach of that across Canada to ensure that you can get it at what we would consider the largest banks in Canada, right to more local credit unions. So that's a very big program. Within EDC then, and within our own existing business, we announced our BCAP, Business Credit Availability Program, of $20 billion. And that's actually a guarantee program where we provide a guarantee to the banks for up to $6.25 million, and that the banks would extend credit to their customers. So we're effectively guaranteeing the bank so that the banks let liquidity flow to the customers. So very important, again, you see the access needs to be through your bank, because even though EDC is resilient and working from home, we only have 20 offices across Canada and 1,700 employees. So we need to work with partners that can actually reach out to many small companies. And then our most recent announcement was with respect to oil and gas sector. And maybe we can get into that, Derek, later on around what sectors do we see have had the most difficulty, etc. And we announced some very specific support for that sector a few weeks ago. What I'm hearing from customers, despite all of the programs I just referred to, and of course there are many more programs under the Government of Canada umbrella, is actually the difficulty in understanding which program they should apply to, the eligibility criteria, and whether the program is available or not. So certainly my focus is ensuring we get the programs out as fast as possible, we make them as simple as possible, and we try to engage as many companies as we can so that they understand what is available to them. So I'm sure you've got lots more questions for me, Derek. I'll leave it there and happy to take any questions from the audience as well.
Michael, same question for you on the BDC side. Can you hear us, Michael?
Yes, I hear you now, Derek.
Yeah, sorry. Just the same question on the BDC side. Can you just sort of walk us through a little bit what you're hearing from business and then how they can tap into the various things you've got to offer?
Yeah, thanks, Derek. And Mike, I want to thank you and your colleagues at Empire Club for getting us together. I know your sessions are always so well attended. It's a great way to meet and network. So we're not really getting that full aspect of an Empire Club event, but especially now it's so important to get together and exchange ideas and listen to each other, learn from each other. And you've created that forum for us today. So I want to thank you for that. So Derek, to your question, again, BDC and EDC work very closely together. We're also a Crown corporation, and our focus is on entrepreneurs and small business. We call ourselves Canada's only financial institution that exclusively focuses on entrepreneurs. We have 60,000 clients. We've got about 125 locations across the country. And our role, what we do is we lend, we invest through our venture capital group mostly, and we provide advice to small business. And all told, that adds up to about, again, 35 billion or so in assets and about 60,000 clients. And we play a role that is complementary to, rather than competitive with, banks and credit unions. We work alongside them. We tend to take, on average, kind of 4 times more risk than chartered banks do. And as a result, we tend to kind of lend to and focus on a slightly different type of company than financial institutions than chartered banks do. So a role with them is complementary. Now, as Mairead said, when Derek, to your question, when kind of things first started, 6 or so weeks ago, we all started working from home. And there was just a torrent of activity and requests coming our way. We have an online financing channel. And over the course of that first week or I guess the third week in March, the week of March the 16th, we had as many requests for loans as we did and as we normally get over the course of a full year. So we had a big challenge, obviously, of kind of getting everybody productive from home, making sure they had productive, safe environments at home, and dealing with this order of magnitude wave of volume coming at us. So, and bit by bit, we've been able to deal with that. And we've put in place a number of new products and solutions, all of which were designed to be more accessible, frankly, more affordable. We've brought our rates down, we've eliminated fees. We've offered postponements to 35,000 of our clients. And the whole hope is to provide them access to the financing they need to get through what is going to be a difficult stretch for the next period of time. So we offer working capital loans up to $2 million, from very small amounts up to $2 million. As Mairead said, we're part of the business credit availability program with the banks. EDC, as you mentioned, provides loan guarantees. We're providing what's called co-lending. So these will be term loans the banks provide. They'll take 20%, we'll take 80%. But same principle behind the guarantee from EDC, which is this is designed to get more credit moving, more credit in the hands of small business. We've also introduced what's called a convertible notes product for any sort of finance geeks out there. And this is designed to support companies that are backed by venture capital firms. And again, it's a bridging solution that's going to help get these companies through the next stretch. And given our complementary role, we're doing this in a way that is insisting on and matching private sector investments in these companies. And as Mairead said, there's also solutions we're providing to the oil and gas sector. And then lastly, for those of you that are interested on bdc.ca, which is our website, and we're literally getting millions of visitors every week. Every day we're posting helpful stuff, for lack of a better word, around the range of government programs and where to go for what, advice, how to manage cash, how to get through this crisis, and how to retain your employees in this tough period of time. So for those of you that are actually leading and operating small businesses or advise people who do, I'd encourage you to go there, because it's something that our clients have told us is extremely helpful and very, very practical to get through these tough times. Back to you, Derek.
Thanks, Mike. Mairead, we'll go back to you because I'd like to get your perspective on how this whole crisis looks from an exporter's point of view. So many countries are shut down, so supply chains are badly damaged and will take some time to rebuild. Give us your view on that. Can the exporting business ever get back to the level that we were at prior to the pandemic?
Thanks, Derek. So yeah, you're absolutely right. Canada's exports have been impacted. And I think one of the things that people may not actually understand about Canada's exports, we actually have a lot of exports that are linked to services. So anything that is person-to-person, professional services, and that's based on human capital. And that's a huge part of Canada's export network today. So obviously that's constricted, but it's equally an opportunity whereby, given that it's based on human capital, it can happen from home and it's not as dependent on supply chains. So, very hard hit, but then some opportunities there for recovery when we come through recovery. I think the more challenging one is what you refer to, Derek, which is supply chains. So, wave one is really the impact of COVID-19 in China and the implication of China in supply chains today. So many supply chains are integrated and they see a lot of their input or raw materials coming from China. And that, I would say, took a little bit of time to see through the actual manufacturing footprint of Canada because of inventory, because of items that had been shipped. So, and a lot of our manufacturers are still honoring orders that have been in their system for a period of time. So I think the danger time for exports has been as other countries have closed and has been, and in particular with the US, which of course remains Canada's largest export destination. Notwithstanding the borders remain open for trade, it now starts to become that challenge of getting the right supplies through your supply chain and perhaps not even understanding where the risk was in your supply chain to then getting them to your customer. And logistics tends to be a problem. So it is challenging. Will it come back? There's lots of talk at the moment about multilateralism versus protectionism. Many countries that are focused on should they have different supply chain networks within their countries, because now they realize some of the challenges with not necessarily having that structure. So there's certainly a lot of discussion around onshoring, nearshoring, how actually that would work. I think we certainly have a belief that there's a lot of demand out there and that as the countries start to open up, that consumer demand will still supply the demand for exports. The consumers tend not necessarily to think of these philosophical conversations on global trade. They're very used to what they want and they create a lot of demand. So we're hoping that will start to have its impact. We're hoping that for Canada, actually some of these discussions about security within supply chains will actually be very positive for developed economies. where people will want to diversify their existing supply chain. So would present some opportunities for exporters as well, whereby countries now want to have exports or imports from other countries. But as I said, it depends which sector you're in. If you're in the transportation sector, we see that as a sector that's going to be probably impacted for longer, particularly our airline sector associated with that. And equally, we see challenges in our manufacturing sector and in transportation overall. I think where we're starting to see some positive signs is with respect to food processing and agriculture. So again, people and countries trying to secure food. So food security has become an issue, and therefore an opportunity for Canada that actually has a lot to offer with respect to agricultural exports. So a bit of a mixed bag. I don't think it will look, exports will look the way they did going into this crisis, but there's still lots of opportunity out there. Talking to some companies, I'm hearing that more flow of orders starting to come back from China, Japan, South Korea. So Asia starting to lead the path in actually resuming normal business. So that's good news. But without a doubt, Derek, challenging times ahead. And what my job is to make sure that we can help exporters and all Canadian companies get through this liquidity crunch so that when times do turn, and we've seen in China it turns quite quickly, that they're actually ready to seize some of these opportunities.
One feature about a crisis that's this serious is that businesses are forced to adapt really quickly. This came on quite suddenly. You know, we're really only a little more than 2 months into it in Canada. So this question's for both of you. When you talk to business owners, tell us a little bit about the kinds of things you're hearing about how they're adapting, and if you have any examples, that would be great as well. How are they retooling their businesses or thinking about business models, that sort of thing?
Sure, I can start if you like, right? So Derek, let me make 3 points on that. And again, we're in constant touch with our clients. Again, we have our 2,300 people, all of our offices. We're constantly surveying and calling them. So we feel that we have a pretty good sense of actually what's going on and what's on folks' mind. So the first point I'd like to make is since this crisis started, because things are moving incredibly fast, we're actually in the market kind of surveying and learning from entrepreneurs every 2 weeks. And what's interesting, you look at this data, one thing hasn't changed since the beginning, and that is the vast majority of SMEs are worried about the prospects for the business, prospects for the client, et cetera, for the company. But when you double click, Derek, on the data, there actually are some interesting observations of what's changed over the course of the past 5 weeks since this started. And the level of concern that entrepreneurs have in terms of their ability for the company to survive, in terms of their ability to keep employees, and in terms of the confidence they have in their supply chains to work, has actually materially improved. The concern levels are down since we started 5 weeks ago. So that I think is a function of the initial state of panic has worn off. And I think as governments at various levels have introduced a whole array of programs, not just through EDC and BDC, but the wage subsidy program, the rent relief program, et cetera, folks are now seeing the sense that there is going to be a possibility they'll get through this and survive. So that's one thing that we see, which again, I don't want to overstate it. It's far from a good picture, but it is getting better, and the level of anxiety is starting to come down a little bit on the part of SMEs, which I think is something that is good. Second, to your question, what's interesting about Canada going into this crisis is that very few of our companies, staggeringly few of our companies, were properly enabled for e-commerce. So about 2/3 of Canadians buy online. Only about 50% of Canadian companies have a website, and only 5% of Canadian companies can actually accept online payments. So one thing that I think is going to you don't want to overstate 5 weeks in the lasting effects of anything, but one thing I think will be a lasting effect is we're going to see a radical increase in just the level of connectivity and e-commerce capability on the part of Canadian companies. And just look at some of the data I have, Derek, in front of me, just comparing the 5 weeks since March versus mid-March versus the 5 weeks prior. And look at furniture, home decor, food, restaurants, clothing, sporting goods, etc. And the level of volumes they're doing online from mid-March versus the 5 weeks prior is anywhere from 200, 350% higher. So I think there will be a lasting effect in terms of this e-commerce readiness that we have in this country, which is important. And then the last point I want to make is there are, and we've seen them all in the press, and they're actually really great stories, companies that are pivoting to get into new parts of the supply chain, offer new product services to make a difference. Spartan Biosciences is one up in Ottawa that's, again, pivoting itself to be able to make testing kits. There's a company that was featured actually, a company we know well, featured on 60 Minutes on Sunday, and I posted the excerpt on LinkedIn for those interested, called Blue Dot. And Blue Dot is actually in the business of predicting the emergence of and the flow of pandemics. And that's a Toronto-based company. Kamran Khan, the CEO, had been a professor at U of T. And it's a fascinating story of how this one relatively small Canadian company is actually leading the charge in terms of public health authorities, helping to predict the flow and manage the flow of this pandemic around the world. So there's a long list of stories, Mairead knows many as well, of Canadian companies that are changing what they do to succeed and make a real difference during this period of need.
Thanks, Michael. So maybe Derek, I could weigh in. Michael, those are great points, and I'll add to a few of them. I think the first reaction we saw from our companies and clients, and like you, Michael, we're talking to them all the time, was the really normal first step reaction of how do I reduce my costs? How do I protect my cash at this point in time? How do I talk to my customers to make sure my revenue is going to come in? And it was a very traditional sense of actually dealing with the financials of their business. I think the second thing is what you referred to, Michael, as new products. And we have seen so many of our like manufacturing companies switch to produce products that are needed on the front line for health workers. So we have companies, I'm particularly in Ontario, Michael and I are part of a network in Ontario of companies, mostly manufacturing companies. And we just saw them switch their production lines right away to the making of masks, gowns, the making of face shields. And they literally just switched production. Many of those companies are actually trying to access additional workers, additional floor space, whether it's for ventilators, other medical equipment. So they've really rallied to the cry of what does Canada need at this point in time. So not only are we seeing them looking after their existing business, but we're seeing them totally turn to what is it that Canada needs at this point in time. And that happens in logistics companies. It happens in food companies. It's really happening throughout the Canadian landscape, which is something that we should be extremely proud of. I think with that comes, Derek, one of the answers to your question around how business models are changing. We are seeing much more network type businesses whereby companies are coming together as a group of suppliers, as a group of demanders. In fact, companies that are actually trying to source these goods. And I think Michael and I are part of what's called a facilitator group. How can we actually accelerate groups of companies working together? So it's actually not about the individual company anymore. It's what part of the network are you in and how can you meet the need of the network overall? So that's a phenomenal change and actually gives us a lot of strength going out of this crisis. If Canadian companies can react that way to a Canadian crisis, how can they equally turn their attention to help other countries? So I see that as a phenomenal move on business models. Michael, you mentioned e-commerce. I couldn't let that go without maybe telling my own story about Shopify. We had the chance to work with Shopify a few weeks ago. They very much recognized the need for what we would call micro companies or companies with less than 2 million of revenue to actually get access to advances from Shopify so that they can put their business onto an e-commerce platform. So many companies now recognizing the need, and an organization like Shopify can make that happen for them really fast. So we actually not necessarily working directly with the individual companies, but through Shopify, we've ensured their advances. So it actually allows Shopify for the first time to make those advances in Canada. So that's a great example of where a larger enterprise can help many small enterprises do something which, to your point, Michael, should really be there before, and it is the growth of e-commerce. I think the other maybe business model trend that we will see is the adoption of technology. So I'm not quite sure what the future of work will look like, but it certainly won't look like what it was going into this crisis. But we do see investments in AI, in 5G, in technology, and technology to help even very traditional companies who haven't been able to access labor workforce at this point in time and need to tilt their business very significantly in terms of products. So that's a lot for entrepreneurs to handle and manage. But many of the ones that I have met are totally embracing the challenge and trying to protect their workforce, protect their company, and to get the path out of this, Derek.
All right, so we've got some questions. We've got about 20 minutes left, and we've got some questions rolling in. So I'm going to turn to the viewer questions. I'm going to ask two at once here. First question for you, Michael. We're hearing about delays when calling BDC, getting through on the phone line, and applying for financing online. Can you tell us a bit about what efforts you're making to improve turnaround? And then it's a question about the small business loan program, which has a payroll hurdle of, I believe it's $1.5 million. And once you're over that, you're not eligible. This viewer says, his mid-sized business could have used the money, but was over that cap. You could take those on.
Sure, Mairead, I'll answer the first one, and the second one I think is more for you. So Derek, your first one, I mean, it's an accurate observation. As I mentioned, when things first started back in mid-March, again, we had a more volume of requests coming in 1 week than we normally get in a year. So our service levels weren't what we wanted them to be. We knew we needed to be better. So we simplified a lot of our processes. As I said, we kind of brought our rates down. We reduced the fees. We moved a lot of people around internally so that people that actually, areas that weren't that busy, we moved those people in areas that were particularly busy. And bit by bit since mid-March, we've upped our game. Truth be told, we're not as responsive now as we'd like to be. So there's continual improvements that we're making. But recognize how important it is for entrepreneurs to know whether they're going to get the financing they've requested, and how important it is for them to get that financing quickly. Time is of the essence. So we know that we need to improve our service levels. Every week they're becoming better than they were. And I'm confident we'll get back in very short order to the types of services service levels that Canadians have come to expect to be.
Thanks, Michael. So you're right. I think the second question, Derek, is with respect to the Canada Emergency Business Account, which has a payroll limit today of anywhere between $20,000 to $1.5 million. What I'll say about that program is that program was stood up very quickly with like a 9-day window. And the primary objective of the program was get to the smallest companies who have the least access to capital, so that they're perhaps not a traditional business account in the bank, but they do run a business. So really the whole premise of the program was to get to those companies first. And that's why it started with a particular range of 50 to 1 million. It became very clear as that program was stood up and today is going very well, that the range needed to be widened to incorporate more companies, and that then the solutions like the BCAP guarantee or the BCAP co-lend that Michael mentioned would be able to step in for companies that we would anticipate that would have a payroll greater than 1.5 million, maybe more familiar with some other types of financing with their bank, so that those structures would be available to them. I can tell you that daily we continue to look at what are the turndowns, where are the parameters working, where are they not. Department of Finance and many of the government departments continually monitor where are the gaps in those programs. And we will continue to tweak those as advised by the government as to where they need to go to actually address some of the needs. So we do recognize that it's not solving all of the problems for everyone, but with over 450,000 companies already accessing it, it is doing what it was designed to do, which was to get liquidity out very fast. So I know, as Michael mentioned, there's lots of government resources. The Canadian wage subsidy is really going live this week, and it's yet another source. So I do encourage companies to make sure they're looking at all of the programs, and many of us have information on our website. Our website's linked to Michael's website at BDC and to the Government of Canada, so that you can understand, are there other programs available? And then we'll continue to monitor to see, are there other needs out there that the program parameters might be extended for by the government. So we'll continue to give them feedback, and they will continue to advise as to where they want the program directed to.
Hey, Derek, can I add to that? Because for anyone who's viewing who is actually is an entrepreneur, small business leader, what Mairead said is just so important. And again, we get so many requests from people to BDC that actually their business needs help, but they actually don't really want and can't afford the burden of a loan. So as a result, we're in constant touch with these folks to help direct them to the right source. Whether it's the raise subsidy program, which is coming out this week, the rent relief program that's out there. The IRAP program has a lot of support for early stage pre-revenue technology companies, et cetera. There's a whole range of things that are done that are not just the types of loans you get from us or EDC, but things that are more grant-like or subsidies. I just encourage everybody to kind of take full advantage. That's why these programs are there. And a lot of companies shouldn't be putting new debt into the balance sheet. They can't afford it. And that's what these other programs are for, as Mairead is saying.
All right, this is a pretty important one, given the point you made, Mairead, about companies retooling. What if a company wants to pivot to serving the healthcare industry or making critical supplies? What sort of financing can they get for retooling, buying equipment, that sort of thing?
Yeah, so I do know that the province, and I'm not even up to speed on all the different programs, but I do know the province of Ontario has a very specific program for retooling for PPE to try and ensure that companies can get the retooling. It was something that was flagged to us a couple of weeks ago, again, by a group of manufacturing companies. And we reflected at EDC, how could our products help? So we actually, within a couple of days, changed some of the parameters of our programs. So you could imagine if companies now start producing a product that they never produced before, they probably have customers they don't know. So we actually changed our insurance programs so that we can work with them. We can work with an insurance broker. We can work with insurance companies so that they can get insurance on those new companies that they don't understand. So that gives them the guarantee that they will get paid from new customers, and equally gives them some sense of the timing of when they will get paid. We also have some other programs that look at contracts and how we would help fund some contracts. So if companies have contracts to build this equipment, how could we help support them through that? EDC doesn't necessarily do equipment financing, but we could work on the customer side, and we could work then on the specific contracts themselves. What we would hope out of this is that companies build new capabilities, understand new skill sets, and that's something that doesn't go away when the crisis goes away. We see, as I said, opportunities to take those skill sets and help export them down the road. So very keen to see what we can do to help. And I'm sure, Michael, there's opportunities within BDC to help companies like that as well.
Yeah, that's right, Derek. So we do, to complement what the range of solutions that EDC provides, we do equipment financing. What we're doing as an organization is, to the extent any company has a purchase order and needs to buy equipment or needs to purchase kind of raw materials for a supply chain in order to kind of fill a gap we have right now in our health system, for example. Those requests go right to the top of the queue.
That's right.
All right, Michael, this was for you. There were actually two questions related to startups. So one is, can you give us an overview of what BDC can do for startups? Second question is, it's about the government's initial response that this viewer feels left out a lot of companies, including startups, but also certain tech companies, bars and restaurants. I know we talked to some where they didn't feel that they were eligible by traditional BDC rules. So how are you addressing that to make sure that that entrepreneurs can get support that they need for something that's happened that's really not their fault?
Yeah, no, it's a good question, Derek. And you're right, out of the gate, back in mid-March, I think restaurant owners, bar owners, et cetera, did feel as though they were shut out from a lot of the programming. But I guess what's encouraging is bit by bit, that's changed. I think the government risk program has been listening. And the changes that Mairead described to the emergency business account is picking up more clients. We've adapted our eligibility rules so that now we're able to lend to these companies. I think the fact that there's $20 billion of support from EDC and $20 billion from BDC through these co-lending guarantee programs to help banks take more risk, that will also help as well. So I think the decision makers, myself included, have I think adapted and changed and evolved since the response to the crisis began back in mid-March. Again, that's not complete. I think there are other groups that still feel as though they don't get the type of support they need. With respect to startups, again, startups, and some people call companies that are 4 or 5 years old and still VC-backed startups. Some people call companies that have really just started last month as startups. So the definition, I think, is important. And what we're able to do through our lending programs is lend to companies that have been around for kind of 12 months. Through our notes program in BDC Capital, we're investing in kind of VC-backed technology companies. This will still, and that's where we're focused. Many companies that are younger than 12 months, again, won't be part of this. But again, there's the IREP program, there's the business account program, there's the payroll support and the rent support that are all designed to help all Canadian companies. And frankly, a lot of companies that, again, that we talk to that are really new startups, kind of very pre-revenue, they need help. They don't actually need debt. And they started with us back in mid-March because the only obvious solution was BDC. When you look at their financials, you look at their need to finance themselves down the road, you look at the burden of debt. Frankly, most companies in that stage should be tapping into more of the grant subsidy-like programs, like the rent relief, like the payroll, like the business account, because they're much more appropriate than a term loan for a company at this super early stage of its development.
All right, thanks. There's a really good question here about the oil and gas industry. Some assistance has been offered by the government to help with liquidity. Obviously, that industry is under a great deal of stress right now. Is there a limit on the size of loans that energy companies can get? And are they only for companies that will be financially viable at much higher oil prices, which we assume will come someday?
Mairead, do you want to go first?
Yeah.
Or do you want me to go?
Sure. So both BDC and EDC have programs for oil and gas. It's a very specific sector. And when you look at the actual structure of the industry, what really protects jobs, what really generates a lot of the activity in the Canadian sector is with the E&P companies in the oil and gas sector. So I think for both BDC and EDC, that's where we're very focused on how can we help out our exploration and production companies. So both organizations, and EDC has gone out and said, yes, we are there to provide both a guarantee product as well as what we call bonding, or I guess coverage for letters of credit, if you wanted to describe it a different way. And the reason for that, Derek, is very specific because we do recognize the way in which support is given to those, or bank facilities are set up for those E&P companies. It's based on the value of their oil reserve, so the oil in the ground. And as you rightly say, when the price of that varies, it can have a very significant impact on the borrowing base of the companies. So our guarantee is to go in and actually help the banks and those companies deal with the sharp reduction in the price of oil through a very specific guarantee. So it's a very complex product. It's a product that the industry will know very well, and therefore will be able to make use of. So it's an example of where we've had to go in on a sector basis and provide a very specific solution for the needs of that sector. So we do have a value. We've said we will be providing guarantees up to $100 million for companies based on a process with their bank and a review of their reserves and, of course, the financials of the company. But we very much understand the situation caused by the oil price in those calculations and determinations.
And Derek, the one thing we're doing as well to complement the work at BDC, it kind of recognizes that for the next period of time, months, potentially years, it is going to be tough in the oil sector. And it's unlikely to see prices recover particularly quickly. So what we're offering is what's called a mezzanine solution, again, for those that like financial products. But its feature is that over the course of the next few years, the company only pays back interest. And then it makes, at the end of the term of this loan, what's called a bullet. It's got a lump sum payment for the amount of the loan. And it's actually tailor-made for sectors like this that are going through a real trough right now, and they need time to come out. And that's what this product is going to add to what EDC is doing, to give these companies more liquidity and more optionality with respect to their strategies and prospects.
All right, we got time for a couple more questions. One of them comes from a viewer who asks, for companies without payroll who just use independent contractors, they seem to fall through the cracks of some of these programs. So what have you got to help them?
So we are aware of that issue, Derek. That's something that's under discussion, I know, with the Government of Canada officials as they look at the CEBA program and the challenge that payroll offers to some companies and some companies that employ contractors. So that is a current discussion, and we've heard that feedback on the program. So we've provided the feedback to the government, and they're assessing the situation on that one.
All right. Sorry, go ahead.
No, I was just going to say, again, Michael and I continue to remind people that they need to look at other programs as well. The one I was referring to there was specifically the Canada Emergency Business Account. But as per Michael's previous points, you know, the IRAP programs, the rent subsidies, the wage subsidies should also be programs that these companies are looking at.
One of the really striking things in the BDC survey of entrepreneurs is, is just the number of companies, the high proportion of companies who feel this has had a really material impact. I mean, this event is broad across the economy in a way that the financial crisis never was. And one of the great questions is for the recovery is how much will this shock confidence? So I guess before we wrap up, I want to ask each of you where you think we'll be sort of 3 months from now and 6 months from now in terms of the economic recovery. And then I've got one more after that.
Okay, well, I'm not sure my crystal ball, Derek, is better than anybody's. So the advice that this isn't going to be the answer to your exact question, because I think it is so hard to. I mean, it's impossible to know 3-6 months down the road what the recovery is going to look like, and hence what the confidence levels are. But the advice that we give our clients or entrepreneurs is to be prepared for a rocky recovery. And whether it's slow in terms of getting the rules allow us to get back to normal activity, or whether it's just the fear that so many of us will have that are going to prevent us from getting into normal activity, whether it's the debt overhang that's going to limit consumer spending. There are lots of things out there that are cause for concern. So the advice that we give our entrepreneurs is kind of make sure you stay healthy and manage your stress. 2 is make sure you are very explicit in terms of your cash flow management, and make sure that you are kind of hoping for the best but planning for the worst. You have the cash resources to go through this. 3rd is make sure you stay in touch with your employees or ex-employees. Some people haven't been able to retain their staff. You want to make sure that when things pick up, provided you're a good employer, these folks want to come back to you as their first option so you can get a ramp up quickly. And then lastly is just make sure you have a constant dialogue with all of your suppliers, your supplier of rent, your supplier of capital, your bank, your supplier of materials, so that, again, you have in place a basis of trust and goodwill a mutual support, so you have the means to kind of talk issues through as this time continues, because it's just so hard to have any sort of certainty as to recovery and confidence levels.
Yeah, and I would support that, Michael. And what I would add is, the type of recovery will depend on how well we actually deal with the health crisis that's in front of us today. So, already we can look to the Asian countries who are perhaps further through the crisis. And, the risk is, and certainly in predicting, we might be able to say, when's the end of wave 1, but what if wave 2 comes through? So the actual first piece of advice we give is that we've absolutely got to deal with the health crisis and ensure that we actually can have an orderly return to normal conditions, post-COVID-19 normal, whatever that might look like. Past viruses that would have happened around the world economically actually caused pent-up demand. And, whilst there was a recessionary impact in the short term, economies did rebound. But the rebound will depend on actually how well we come out of the current crisis. It will depend on how long we're in this period of retraction of the economy as to how we come out of it. And I think you're right, Michael, it will be a rocky return, and it will not be the same for every sector or for every company, or even geographically, it may not be the same. We already hear that discussion around companies that are based in areas, perhaps not in large city areas, but are in more rural areas, actually haven't seen the impact of the crisis, whereas other companies have. So there are many, many factors that will determine this. But the number one is actually how we deal with this health crisis, and actually allowing ourselves to get out of it and then be on the road of recovery. And I totally agree with your comments, Michael. Great sage advice for the companies themselves.
1 minute remaining. Do you have any final thoughts or advice for entrepreneurs as to the best things they can do right now?
The two things I'll just repeat is, number one, for those of you that have a banking relationship, take full advantage of that, because so much of the credit is flowing through your banks, and with EDC's guarantees and our co-lend, there's more credit there. And then two, I'll just say it again because the programming is so broad, is learn, study, take advantage of the many programs that provincial and federal governments have put in place. They're there to be used, and some will be essential to make sure your business gets through this tough period.
Yeah, absolutely. Those would have been the two I would have chosen. And maybe just to expand on Michael's, maybe it's not just your bank, it's your credit union, it's your financial institution. Stay very close to them and ensure you're asking them, what is the best product for you and for your company? As Michael said, it's not always debt. And there are a lot of government programs out there, but equally there's a lot of associations, organizations, even the Empire Club holding this event today, that are trying to expose those to you. And if you're part of a network or association, leverage that, because they actually can help tailor that maybe more to the type of company that you're working for. So I do encourage companies equally to talk to their peers, to learn on what's going on in their industry at this point in time as well.
All right, Michael and Mairead, thanks so much. And I'll hand it back to you, Mike Van Solen.
Well, thank you very much. This has been exactly the type of discussion I was hoping to have. Incredibly insightful. I hope for some people out there, they might have found it actually hopeful to see all the support and the effort that's going into helping keep this economy running as smoothly as we can in these times. I'm going to turn it over to Christine DeBacco from Torys LLP, our sponsor for this event, to offer proper appreciation.
Hi, everyone. Thank you so much for giving us the opportunity to sponsor and participate. I am a partner at Torys and chair of the Emerging Companies and Venture Capital practice there. I've spent a very long time working with startup companies and investors. I have over 10 years of experience in Silicon Valley, and I'm recently moved back home to Toronto. So this is the world I live in. And I've also been spending the last few weeks helping investors and companies, navigate the landscape and helping them get the resources they need. So it was really wonderful to see kind of all this information in one place. And we were thrilled to be able to support in some small way. So thank you so much.
Thank you.
Wonderful. To our audience out there participating in this virtual event, our new the new world we live in, we thank you so much for joining us. We are working hard to roll out new events through this new format as we live in this, as we all self-isolate in our homes. We have an exciting one next week to really look at the impact of COVID-19 on the real estate sector and what recovery looks like. Again, another all-star cast. Just a few names: John Love, the CEO of Kingset Capital; Michael Turner, the president of Oxford Properties; and Sam Colias, the CEO of Boardwalk REIT. So please feel free to check that out. And to everyone who's with us today, thank you so much, Michael and Mairead. We really appreciate your insights. Derek, for moderating a wonderful discussion. To everyone viewing, thank you. This meeting is adjourned.
Thank you, Mike.